Good morning. First, let me ask you to imagine something. What if there were no banks? Your savings, you'd have to hide them under your bed. A family wanting to buy a house, they couldn't get a loan. A businessman with a new idea, he couldn't get or borrow money to start. As you can see, banks are very important. They are not just for rich people, just like for the people in Makati. They affect all of us. They help teachers get loans, they keep OFW money safe, so they help the country grow. And today, we will talk about the Philippine banking industry, and we will focus on the year 2018. By the end of this talk, we want to achieve three things. First, we want to describe how banks have become stronger, and we will use a tool called the CAELS framework. Second, we want to explain why banks are like an anchor for our economy, just like they keep it stable. And third, we want to identify the main reasons why the banking industry grew. So, let's get started. For our discussion for today, we will cover 5 parts. First is the big picture. How big is the banking industry? Second, the forces that drove growth. What made the industry grow? Third, a deep look at the financial health. Are the banks healthy? And we'll use the CAELS framework. Fourth, some specialized segments like foreign banks and trust funds. And finally, we will summarize the key takeaways. Let's start with the big picture. In 2018, the Philippine banking system was strong and it kept on growing. Here is a key number. Total assets reached 16.9 trillion pesos, and that is a lot of money. But what does it mean? To understand, let's compare it to our gross domestic product or GDP. The GDP is the total value of everything the country produced in 2018, and it was 17.4 trillion pesos. So, the assets of our banks are almost the same as the value of everything the Philippines made in a whole year. This shows how important banks are. They are not separate from the economy, they are the economy. Also, these assets grew by 11.5% compared to the year before, and that growth was mostly because of the big banks, the universal and commercial banks. Now, why did the banks grow so much? It wasn't just luck. 3 main forces helped them grow. First, the economy was strong. The Philippines was growing fast. Our GDP grew by 6.2% in 2018, and that was the 7th year in a row that growth was over 6%. When the economy is good, people borrow more and banks do well. Second is the government made better rules, or the government has proactive regulation, so they passed new laws to protect the banking system. One law is the Republic Act 11211, which gave the BSP more power to watch over banks. And the second law is the Republic Act 11127, or the Payment Systems Act, which made sending money safer and easier. So these laws made the banking system stronger. Third, the banks themselves worked hard. They didn't just wait for things to happen. They raised more money. They sold bonds, and some banks even merged with other banks to become bigger and stronger. This helped them handle risks better. Now, let's check the health of the banks. Is the system really strong? We will use the CAELS framework. Let's start with letter C for capital and A for asset quality. First, capital. This is the bank's own money. Savings. It acts as a cushion if things go wrong. And we measure this with a capital adequacy ratio, or CAR. So the BSP says banks must have a CAR of at least 10%. And in 2018, the big banks had a CAR of 15.4%. And this means they have a lot more of extra money to protect themselves. So they are very safe. Second is the asset quality. This means the quality of the loans they give out. So do people pay them back? we look at the non-performing loan ratio, or NPL. This is the ratio of bad loans to total loans. So the industry-wide NPL was only 1.8%, and that is very low. For the biggest banks, it was even lower at just 1.2%. Also, banks have set aside money to cover all their bad loans. We call this the NPL coverage ratio. It has been above 100% since 2011. So this means if every bad loan failed today, banks could cover it without using their own capital. Another good sign, bank loans are spread across many different industries. They don't put all their eggs in one basket. So, if one industry has a problem, the banks will still be okay. Now we will look at E for earnings, L for liquidity, and S for sensitivity to risk. First on earnings, banks made money in 2018. Their total net income grew by 6.7%. And the good news is, they made most of this money from their main job, which is lending. This shows that the basic banking model is working well. On liquidity and risk management, banks also planned for the future, and they were careful. They worried that interest rates might change, so they moved some of their investments to safer places where short-term changes wouldn't hurt them. They also kept their foreign money, like dollars, at safe levels. If the value of the peso goes up or down, they are protected. Now, this strength is not just in the big local banks. It is also in other parts of the industry, like foreign banks. In the Philippines, it also did well. They saw double-digit profit growth. And next is the foreign currency deposit units, or the FCDUs, which handle foreign money and had plenty of cash on hand. Third is the trust operations. It is where banks invest money for people and also grew because more people were investing in the stock market. Finally, let's talk about funding. Banks need long-term money to lend for big projects like roads and buildings, so they can just use short-term savings for this, so they sold bonds. In 2018, the amount of money from bonds jumped by a huge 150.4% to 270.1 billion pesos. This helped them fund long-term projects and also made our financial markets deeper and stronger. Now let's bring everything together. Let's go back to our 3 learning objectives. First, how did the banking system improve? The numbers are clear. Banks have more capital, which is 15.4% CAR. Their loans are healthier, which has the NPL at 1.2% for big banks. They have set aside money for bad loans, and they are making steady profits, and they are managing risks well, so the system is stronger. Second, why are banks is a key anchor of the economy? Because their assets are as big as our entire GDP. They are the main source of loans for people and businesses, and because they are stable, they help the whole economy stay stable. When banks are safe, the economy is safe. And the third, what forces drove their growth? 3 things. A strong economy, which evidenced by 6.2% GDP growth. Next, the better rules from the government or the new laws. And third, is the hard work of the banks themselves. So they raise capital and they even merge with other banks to expand. Now remember how we started? We imagined a world without banks. It was a scary place. Savings were unsafe and dreams couldn't come true. But today, we saw the real picture. In 2018, the Philippine banking system was not weak. It was a strong anchor, and it had big cushions. It had healthy loans, and it was ready for problems. This means good things for all of us. It means a family can get a loan for a house. It means a businessman can borrow money to start a company, and it means your savings are safe. So the numbers we discussed, 15.4% CAR, 6.2% GDP growth, and 150% growth in bonds are not just numbers. They are the foundation of a growing country. So the Philippine banking system has done its job. It is strong. It is growing and it is ready to help the country move forward. That's all.